Hello everyone, Ray Silver here, also known as Silver Fox Stacker, and I want to thank you for watching this very important video. In the world of finance, paradigms are constantly shifting, and the traditional dominance of the American dollar is no exception. For centuries, gold and silver have been considered the ultimate stores of value, serving as hedges against economic uncertainty and inflation. However, in recent years, a new contender has emerged to challenge the supremacy of these precious metals: cryptocurrencies, led by the pioneer Bitcoin. The once unassailable position of the American dollar as the world's reserve currency is slowly eroding as geopolitical tensions, mounting debt, and global economic uncertainties chip away at its influence. In its place, digital currencies have risen to prominence, offering a decentralized alternative that transcends national borders and central bank control. Bitcoin, in particular, has captured the imagination of investors worldwide with its finite supply, decentralized nature, and growing adoption as a means of payment and store of value. As faith in traditional fiat currencies wanes, many are turning to cryptocurrencies as a hedge against currency devaluation and economic instability. In this shifting landscape, the value of gold and silver has also undergone a transformation. Once tightly correlated with the American dollar, these precious metals are now increasingly moving in tandem with cryptocurrencies, particularly Bitcoin. As investors seek refuge from fiat currency depreciation, they are diversifying their portfolios with alternative assets, including both precious metals and digital currencies. The rise of cryptocurrencies as a dominant force in the financial markets brings with it both pros and cons for the precious metals market. Pros: diversification. The growing acceptance of cryptocurrencies alongside traditional assets like gold and silver offers investors greater diversification opportunities, spreading risk across different asset classes. Accessibility. Cryptocurrencies provide a more accessible and convenient means of investing in alternative assets, particularly for younger generations accustomed to digital platforms and mobile applications. Cons: volatility. Cryptocurrencies, including Bitcoin, are known for their extreme volatility, with prices subject to rapid and unpredictable fluctuations. This volatility can deter conservative investors and undermine the stability traditionally associated with precious metals. Regulatory uncertainty. The regulatory landscape surrounding cryptocurrencies remains uncertain, with governments worldwide grappling with how to regulate this emerging asset class. Regulatory crackdowns or unfavorable legislation could adversely impact the value and accessibility of cryptocurrencies. Lack of intrinsic value. Unlike gold and silver, which have intrinsic value derived from their scarcity and physical properties, cryptocurrencies derive their value primarily from market demand and speculation. This lack of intrinsic value raises questions about the long-term sustainability of cryptocurrencies as stores of value. Despite these challenges, the growing influence of cryptocurrencies on the precious metals market is undeniable. As faith in traditional fiat currencies continues to wane, investors are increasingly turning to alternative assets like gold, silver, and Bitcoin to preserve their wealth and hedge against economic uncertainty. In the years to come, the dynamics of the precious metals market will continue to evolve as cryptocurrencies assert themselves as legitimate contenders for investors' attention and capital. While the traditional allure of gold and silver may never fade entirely, the rise of cryptocurrencies signals a new chapter in the ongoing saga of financial innovation and disruption. Thank you for watching this very important video. Be sure to like this video and please subscribe to the channel to help us grow. Leave us a comment. We would love to know what the American dollar is like where you are. Bonus joke. Why did the American dollar cross the road? Because it heard cryptocurrencies were stealing the spotlight. and it wanted to coin a new identity before it became a bit player in the global economy. Ha 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 ha. If I had an American dollar for every time I wrote a funny joke, I would trade it for some gold and silver bullion, depending on what the fiat's fees at.